want to welcome you all to this session of our training. We are gradually getting to the tail of the session. We have basically two more topics left, which is tax filing and tax planning. There are two topics left after today's session, and I want to say kudos that have for those that have been with us um, from the beginning of the training, and you've been punctual. Please maintain it. It's very good. Today we'll be looking at VAT computation, value added tax computation, and quickly, we've talked about VAT and a lot of issues surrounding VAT. And again, it's very good for you to quickly run through some amendments in the value added tax. Today, we're not looking at only VAT, we are looking at both VAT and withholding tax. We have a special guest with us that will take care of withholding tax, and I will introduce him as we proceed in the training. Now, usually in tax, what we've seen before the Finance Act is a lot of SMEs, small and medium scale entity, do not comply with VAT filing, especially those ones that have a turnover of more than 25 million. What usually happen is that uh, if when you want to get a tax clearance for most small businesses, you notice that they might have been filing their company's income tax, right? But when it comes to filing of VAT on a monthly basis, a lot of them don't do it, and they pay a lot of penalty and interest. I mean, for not even paying VAT and for non-filing VAT. But the Finance Act 2019 has kind of amended it for, small businesses. So if your turnover is 25 million and above, that's when you are exposed to filing of VAT. But if your turnover is less than 25 million, then VAT exposure is not there for you, but you need to be watchful so that anytime you meet the 25 million mark, you need to register and file for VAT immediately. So we're going to be looking at briefly we'll be looking at briefly some of the we'll be looking at briefly some of the amendment in the Finance Act. And again, we know that VAT is no more 5.0%, 5%. VAT is now 7.5%. So that takes effect from 1st of February, 1st of February 2020. So we are aware of that. Those are the key changes you see in the VAT, in the Finance Act. Okay, so now we also have some amendments done in the Finance Act of 2020, and I'll quickly go through the few amendments now in the Finance Act of 2020. Now, we are looking at VAT amendments before we look at some few aspects of the computation. Okay, uh, so that's so we are looking at this. Now, in the Finance Act, we notice that Section 2 of the Act has been amended to include incorporeal right as a taxable supply of services. So, meaning that incorporeals that are like intangibles like patents, copyrights, these are incorporeal rights. And before now, in 29 Finance Act 2019, incorporeal property were classified as goods, and which created some form of controversy. Are they really goods? But now, the Finance Act has classified incorporeal property as services, which is a vatable service. Okay, and this make it uh, lets us to know that it's also within patents, copyrights, and any other intangible assets within the scope of VAT, and they are vatable. Okay, we also have another aspect I've explained this part of incorporeal. We also have, this is just a brief aspect of the Finance Act of 2020. We also have the issue of NRC, which are non-resident company. We have some amendments there. Now, Section 10 has been amendment to include tax registration obligation for non-resident companies that supply taxable goods and services to Nigeria. Okay, so it has been amended to, so that means that non-resident companies are required to register, for VAT. Okay, now the former provisions appear to be applicable only to, applicable to only taxable services. Thus, the amendment under the Finance Act clearly states that both taxable goods and services provided by non-resident companies should be subject to the provision of Section 10 of VAT Act. Okay. Now, this amendment has increased the administrative burden of non-resident companies, which are subject to VAT in Nigeria. Although the amendment also provides that the affected non-resident company may appoint a representative to assist in fulfilling their tax obligation, thus lessening such administrative burden. So it therefore means that before now, the law requires non-resident company to register for VAT using the address of the person they are transacting with. That means that if you have a company not registered in Nigeria but have transaction with businesses in Nigeria, maybe it's in UK, US, Canada, and they have a company in Nigeria, XYZ Limited, they are transacting with. They are supposed to use, the law compels them to use the address of XYZ Limited for VAT registration purpose. Okay, because they have a kind of, that transaction they are doing has kind of created a PE, a PE status, a permanent establishment status to them, meaning that they have someone they are transacting with. And before, if we have these non-resident entities, transacting business without any, PE, permanent establishment, that can be set, that can be linked to them, they may not even charge VAT at all. You don't have to charge VAT to them. Okay, but now if you're a non-resident entity and